Up next, everyone, please join me in welcoming Mr. Andrej Majcen. He is the co-founder of Bitcoin Suisse AG. He has joined and helped co-found Bitcoin Suisse AG in the autumn of 2013 as an account manager, and later on developed and evolved to become a compliance officer, where he ensured that all business activity adhered to the relevant laws and regulations of the digital finance industry in Switzerland. Here to dissect navigating the evolution of digital assets and unveiling investor insights from the fringe to the future. Everyone, please put your hands together in a resounding round of applause for Mr. Andrej!
Thanks a lot. So, thank you very much for being here today and welcome to my presentation. It's a long title, I know. But I'm super happy. I relocated a couple of days actually to the Emirates. So this is the first speaking engagement here. And today is a very special day for us as a firm for Bitcoin Suisse because we are celebrating our 10-year anniversary in the market. So it always feels amazing to be in front of such a crowd at a nice conference with so many young entrepreneurs and crypto enthusiasts working in the same kind of environment. So thanks a lot for being here today. Again, title is long, but what we're going to do in the next 15 to 20 minutes, I'm going to talk a little bit about the early days in crypto. How was it to be around 10 years ago? How did the market evolve in that time? And also, what are my key learnings and takeaways in those 10 years? I always try to distinguish a little bit between two different perspectives, one on the entrepreneur side and pioneer in the crypto space, and the other side is of course the investor side, because also I somehow in the early days started as an investor. But let's jump right into it. And the early days start of course with Bitcoin, because when we started there was nothing else than Bitcoin, and it's so to say the mother of all cryptocurrencies, and it was actually also my entryway into the space. So how did I start? Back in the days I was at university. I guess some of you also had the same journey as well, and I heard about Bitcoin for the first time from a friend of mine. He said that he would like to invest some of his hard-earned student money into Bitcoin because it is some sort of a digital internet currency that is used by gamblers and gamers and so on. And I thought, why would you use that and why would you invest into that? But once he started to explain me the concept of a decentral currency, I was curious. I wanted to learn more and understand how could a decentral form of money actually work. I studied economics and finance. I knew the central world extremely well, but not how a decentral form of money could work. So that was my entryway. And then we were sitting at the university, listening to our teachers and looking at the Gartner hype cycle. I guess that is familiar to some of you from the Gartner Institute, where you have a graph where the different technologies are entered on different kind of evolution stages. And we couldn't find Bitcoin, we couldn't find blockchain or any of the relating topics on that hype cycle, and that was in 2013. So we thought, maybe it is actually quite early and maybe it's the right time to invest into this new form of technology. The big problem that we had at that time was that it was almost impossible to find a reputable counterparty to acquire cryptocurrencies from. So there were a couple of exchanges online, but none of them actually were reputable. You didn't really know who is behind, so you had a website without a clear company or any individual persons behind. Then you had basically a bank account related to a completely different firm. Also that looked a little bit shady, and we decided to, of course, not send our student money there. But we coincidentally, because there was already some sort of a crypto community in Switzerland, bumped into our founder, Niklas, and he then privately sold some Bitcoin to us. But that's not the end of the story, because we acquired the first Bitcoin, but we also entered into a new journey, because he also offered us a new job. He said he wanted to create this new company, and he wants to do something in crypto. He didn't directly know what that could mean, but we were already attracted to that idea. So one thing led to another, and we didn't just go home with our first Bitcoin, but actually also with a job, because he needed a couple of students that could part-time work on his idea to build some sort of a crypto company. So those are some of the early pictures that I was able to find. I think the one on the left side is my first working day. Extremely proud in front of a poster from Bitcoin Suisse, in front of our only desk where the three of us were working. So what was the idea, or what was actually our adhere? So we started and tried to solve the problem that we initially had, actually acquiring crypto in a reputable and trustworthy manner. And that was the groundbreaking idea. So we founded a company in Switzerland. We got a physical address. We got a telephone number. So clients and potential clients were able to directly contact us, to call us, to visit us at the office. I mean, doesn't sound that special, at least not to the traditional world. But in the crypto world of 2013, that was groundbreaking. So everybody, we had clients from all over Europe coming to our office to actually trade crypto in a reputable and in a trustworthy manner. We also early realized that we need to focus on regulation. That's what I built up in the early days, because regulation can also be an enabler. And crypto in the early days had an extremely shady kind of image. It was always associated with bad things, and we knew that crypto would help us to actually move forward and bring us one step closer to some sort of a mass adoption. We of course worked a lot. We had a 24/7 service offering, the three of us covering that. Later, when we had over 300 employees, we didn't manage to have the same sort of service offering, but that's a different story. So we did a lot of education. We spent a lot of time with clients. We have been at conferences like this. That's why it's always cool to be at such events again. But compared to the old days, I mean, this is a crypto-only conference. We were always at finance conference. We had a booth maybe at the end of a corner close to the toilet, and nobody really cared what we were doing. So we didn't really care about that because we were convinced of our dreams, and we actually still focused all our time on it. But the resistance was extremely high. Also at university, our friends always said, hey, try to find a normal job. You're ruining your career. Go to work at a bank or in consulting. Those were like the dream jobs back in the days. But again, we didn't care too much, and those are a little bit the takeaways from the early days. First, on the entrepreneurial side. So if you have a dream and a vision, really follow it. If you're convinced of something, just go for it and work extremely hard to achieve your goals. Then try to build a team, a complementary team of people that can create synergies. We have been so many times at the table, two of us saying, hey, let's close the company, it's not worth it, there is so much resistance against us. And there was always one guy that said, hey, come on, let's try it another time. And that's probably the reason why I'm still here today, and the same applies for my colleagues, because of course we always rotated in that role. Then the last one is not a joke actually, so take proper pictures. You can imagine how embarrassing it is to show you old blurry pictures from myself here, so I would love to show you some different pictures, but we just didn't think that taking proper pictures in the early days would be of any kind of relevance for us. So on the investor side, the big fat cat, I mean, back in the days there were none. You had Bitcoin as a potential target to invest in. You had a couple of other cryptocurrencies like Ripple, Dogecoin, Litecoin, and so on. But primarily, from a pure investor perspective, you only had red flags. You didn't have any trustworthy and reputable counterparties to trade crypto. It was extremely volatile. In 2013 alone, the average volatility of Bitcoin was 10%, average volatility. I know peak days when it hit up to maybe 40%. So you really had to have very calm nerves in that kind of environment. So it was difficult to acquire them. It was extremely volatile. And at the end of the day, those two worlds didn't really match together. So the entrepreneurial side was like in the cute little bubble, working on something, trying to develop something new. The other side was the hardcore investor that tried to put money in, but it was impossible. And then the last point comes, it was also extremely difficult to actually acquire larger amounts. I know a case, actually a friend of mine by now, who wanted to put in $1 million back in the days into Bitcoin because he needed the Bitcoin to invest into another early project at the time. And given the time frame we had, it was basically impossible to execute this trade over different kind of exchanges. So the volume on the trading venues was so low, he couldn't get Bitcoin worth $1 million. And then he said, okay, I do something else with my money, screw that. So if he would have bought the Bitcoin, if he would have invested into that project, and if he would still hold the tokens today, of course, not referring to peak prices, but today's prices, the person would be the richest man on this planet. He would be richer than Elon Musk, and that's roughly by a factor of 20. So obviously, there were opportunities. And whenever there is opportunities, of course, there is also sharks around, and the ecosystem starts to grow. And here, Gold Rush, I call it the next phase. It's not the most innovative name, but thanks to AI art, and kudos to Midjourney, the picture is. But anyway, the next stage is the ICO days, and that was extremely relevant for us in the early days. And I think Ethereum, or the beginning of Ethereum, was actually the kickstart of that kind of age. And actually, that's also the project I've been referring to just before. So while we were always alone in Switzerland, trying to fight for the good cause, trying to educate people and be at conferences talking about crypto, all of a sudden we had some young guests visiting our office. It later turned out that it was Vitalik Buterin and some of his early colleagues that built actually the beginning of Ethereum. So all of a sudden we had two groups in Switzerland. We from the Bitcoin crypto community, and they are building something called Bitcoin 2.0, as they referred to it in the old days. And all of a sudden we had two communities working for the same cause. At the later stage, also the city of Zug, the local government, got attracted to us, and they said, we see there's a lot of innovation happening, there's a lot of young entrepreneurs here and enthusiasts, how can we support you? And we told them we were actually quite happy at that time, but if they want to show a signal to the market, they should accept Bitcoin as a means of payment. And they were crazy enough to do that back in 2015, 16, only for public services. By now you can even pay taxes in Switzerland in crypto, at least in Zug. But that was a huge boost, because every crypto developer team or everybody who wanted to found a company, they had all of a sudden Zug on the radar. So that's why the Crypto Valley then later on also started to develop and raise or arise actually out of Zug. So that was the initial boost. We as a financial service provider, in midst of all of that, were circulated basically by all those developments. So we supported the Ethereum Foundation in the early days, but then later on also a lot of so-called initial coin offerings or ICOs. We did a lot of extremely high-quality projects that worked on their own blockchains and so forth, like Tezos, Bancor, Omisego, Silica, Decentraland, and many more. But over the time, of course, it also attracted the bad players, because everybody saw there is a lot of money to be made. You can easily get millions and millions. And we had people coming to our office. They said, yeah, we have this cool project here. I need 30 million for it. Then we asked, for what exactly do you need 30 million? Do you have like a financial plan? Do you have a budget? Do you have any kind of roadmap? No, we don't have that. You need to develop it for us. Then we said, yeah, why do you need the 30 million, right? So, and that was a little bit the beginning of the bad quality and the bad players coming into the market. I call it the random white paper generator. And there was actually really a tool called like that. So you were able to enter some buzzwords and it spit out some finalized form of a white paper. And that's quite an important document, of course, for investors to go through, but at the end of the day it was just fake. But the difficulty was to really distinguish between those projects. And in that time, we analyzed around 1,600 projects and conducted at the end of the day, I think, 36 ICOs in total. But the market was completely overheated, and then at one point the regulator came in and said, guys, you probably, I mean to the entire crypto community, some sort of tokens might classify as security tokens. So traditional security law would apply to them in the sense that trading and the initial issuance would of course fall under those laws. So that together with a completely overheated market, including a lot of scams, multi-level marketing projects and so on, then of course collapsed because the infrastructure was not there at that time. So what did we learn? Still old picture, but thanks to our very conservative kind of behavior in the previous years, we were able to accumulate a lot of reserves, because we knew the market is extremely volatile. There is good days, but there is also bad days. That's one of the learnings I also want to give you on the way, to build reserves and to be humble let's say, conservative when it comes to spending, because it's always easier to spend somebody else's money than your own money. But if it's your own money, and we, for the first 7-8 years, were completely self-funded, that's why we had to be conservative and really plan our money in a long-term way. Use your time wisely. Also in the last bear market, we developed new products like collateralized lending. There was a huge demand from the market, from projects that were unicorns on one day, but then lost all their value basically the next day. So they were sitting on a lot of worthless tokens in some sense, but they had to pay a lot of bills for offices, people they hired, and so on. So we paid them out a fiat loan, took crypto as collateral because we had the fiat liquidity and we were allowed to do it with our own money. So that was quite interesting. And then we also developed first staking offerings and so forth. So that was basically the key messages here. Also, if there is a challenge, there is always an opportunity. So try to focus on those and use the time wisely. And yeah, I know there's a Lambo outside, but in the bear markets, forget about them. You can buy them at a later time, but that's not the best kind of spendings. Then on the investor side, I think it was extremely difficult and challenging to maneuver around the different projects, because on one side you had pearls like Ethereum, on the other side you had a lot of scam projects, and all of them basically at the beginning only had a white paper. You didn't really know what is 100x or 1000x development and where do you lose all your money, because at the beginning everybody just has a white paper, some roadmap and a team. But based on that, you need to make your decisions. Do you invest into it or not? Because everybody works on a roadmap, and there is usually no products available at the very beginning. So also there, crypto is as well people's business. Don't forget that. We're living in a digital age, but I've seen the best projects with great tech stack, with great people behind, fail, because at the end of the day, the people that were pulling the triggers and were decision makers didn't get along with each other. And at the end of the day, we or you as investors pay the bill for that. And then, of course, don't be greedy. As I mentioned, try to really handle yourself in a way that you can live on one side with those 100x kind of investment opportunities, on the other side really know when to sell and when it's time to continue on. And usually a good indicator is if your neighbor or grandmother or the mass media is talking about crypto. Of course, not knowing who your neighbor is, but those are usually good indicators. Then crypto today in 23. I think by now everybody burned their fingers, including myself, or especially myself, because I've been in for quite a while. So also the big ones, the big institutional players burned their fingers. If you look at the investor list, for example, from FTX, you know what I'm talking about. But I mean, looking at their sponsorship engagements, and I mean, they had a stadium, a football stadium, so what could potentially go wrong? But yeah, we have seen it. So everybody burned their fingers, the who is who in the traditional space as well. So the valuations dropped significantly. That's also another fact. Substance, of course, matters. But what I think is the key learning here is that strong teams, committed founders, committed management are extremely important, of course, with the right business ethics. Because if the business ethics are rotten, if the team is rotten, I mean, don't even think about investing in it, no matter how good and how fancy their slides look or on what kind of sports advertisement they're doing. So really, if the core is rotten, everything is rotten. And then, of course, projects and also you in the future will be challenged. So what problem do you really solve? Why are you here? And what real-world use case do you provide at the end of the day? And that's extremely important. That's something I think we together as a crypto community still need to improve, because after 10 years in the game, there is still a lack of real-world use cases. So where do we really have blockchain in our daily items and tools that we use? And where is the real-world applications for them to reach mass adoption? Then, of course, institutional adoption will come. That's clear. I think the upcoming ETFs next year will certainly have an impact. But let's not forget that crypto is still extremely vulnerable, embedded in a traditional financial space. And that, of course, also extremely matters when we talk about next bull run. So back to the Lambos. I think eventually they will come. But first, what did we learn and what do I want to give you on the way? First of all, we managed finally to get proper pictures. But I really challenge you, and I guess most of you are already in the space now, But for the ones that are contemplating about joining the crypto space, really think about it twice, maybe even 3 times. Do you really want to join it? Because it's a tough environment. There's a lot of extremely clever people, and you need to be extremely good in one thing. So you need to distinguish yourselves, your business from the others, and you need to think about your own USPs and what problem do you solve at the end of the day. Don't fool yourself. Challenge yourself. I think that's extremely important as well. Be realistic and not naive. Also on the investor side, of course, the same applies. Learn from your mistakes. If you can afford, maybe get an advisor or a mentor. I think if I would be able to talk to my earlier version, the one we have seen, I would have saved me a lot of money and a lot of gray hair as well. So think big, and if you think big and build something, think about the culture as well, because that's key. At the end of the day, we all work for a salary, but job should also be fun, of course. So culture is important to embrace your employees and to grow. On the investor side, I need to challenge you even harder. Do you really want to invest into an environment where I would say that over 95% of the projects are dying out in probably the next 10 years, where market prices collapse significantly? If you can live when the prices drop like 20% overnight, and you can answer all of that with yes, then I think now is the time to actually go in, because everything is at a discount. That's of course no financial advice, but now you have the opportunities to enter the market at prices that have only been here like 2-3 years ago. So if there is substance, if you believe in a project that will be around also in 5 to 10 years, maybe it's actually a good time to invest. And then don't forget the regulatory environment, I mentioned that before, and also the jurisdiction you're in. But looking at where this event is based, I think you already made the right decision, because I strongly believe in the power and the future of the UAE as a future leading crypto hub globally, and I think together we can all work on that vision. And I hope you got one or the other lesson to take home and to make better decisions in the future and to prepare yourselves for the bull run. So thanks a lot for your attention, and yeah, have a nice afternoon.